Cramer. Welcome to Mad Money. Welcome to Cramer. I'll do my friends. I'm just trying to make you a little bit of money here. My job, not just to entertain, but to educate you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. Many times in my career, I've heard people claim that a week was pivotal, as if it can change the direction of the entire market. Next week, no hyperbole, is pivotal. It's significant. I'm willing to make it a free fire zone of superlatives. And here's why. We have not only a Fed meeting, not only the non-farm employment report, but we also have earnings from Apple, Amazon, Meta Platforms, and Microsoft. In short, next week determines the market's direction for the duration, or at least the rest of the summer. But before we get to the specifics, let's deal with something my morning colleague David Faber broke a few weeks ago. The planned merger of Union Pacific and Norfolk Southern. A seminal deal if it's allowed to happen. Something that would have been unspeakable under the previous administration. And honestly, most other administrations. It would be a tacit admission that anything could be approved, as these companies were always expected to compete against each other. If you hear talk of a compromise that the combined rail has pledged to not raise rates for, say, I don't know, the next 5 years, then you could expect that this deal would actually be approved. Now, I think it's a coin flip, because there are only a handful of major railroads in the United States, so it might be a tough sell, even now that we have more business-friendly regulators. So I want to see something definitive on Monday. Also, before we get to earnings, keep in mind that the bulls want to see trade deals galore this week, because it's the last week before President Trump's remaining tariffs by fiat start in earnest. I can't tell you who will capitulate, but now that Japan's thrown in the towel, I expect more countries to follow suit. If I had to put my money on it, I'd bet on South Korea, if only because we have so many military bases there, and, well, let's say we do a lot of commerce. I think they get the better of us, but others might argue otherwise. Now, with that in mind, let's talk earnings. Monday after the close, we heard from two companies that I actually have a fascination about. One is Celestica and the other is Whirlpool. Many tech products were thought to be made by nameplate companies, but you know what? They actually get built by Celestica, Flex, or Jabil. Celestica will tell us how so many areas of tech are doing. It's worth paying attention to. I've stopped paying. I kind of dropped out of looking at Celestica. I was only focusing on Flex, but I want to look at all of them now. How about Whirlpool? The president's tariffs on steel have made Whirlpool's competitors more pricey than America's own. This stock could really fly if we get the kind of opportunity to sell unfettered, full-price washers and dryers without the dumping of our so-called trading partners. Tuesday, before the open, United Health Group reports. Yesterday, the company basically admitted that there's a criminal probe and it's cooperating. I think this cooperation actually takes any existential worries off the table. You don't have to be concerned that Medicare fraud could take down the entire company. It's a positive development, even as I think this remains an uninvestable story. Next week, I really want to hear what Boeing has to say. That Kelly Ortberg has the company humming. My hope is that he gives us a timetable about when we can stop worrying about the government's control of how many planes they're allowed to make each month. I bet this stock goes higher. Procter & Gamble reports, too, and this one's a question of raw costs and tariffs versus marketing muscle. I think the tariffs lose, as this company finally has the currency tailwind from the weak dollar. They've been the most hurt of any company I deal with other than Johnson & Johnson. After the close, we get Starbucks. That's a company that's climbed relentlessly until today, yesterday, of course, after that drop to the 70s. I bet new CEO Brian Niccol is ready to announce his China plans and to speak proudly of this success in improving throughput. That's quite a contrast from the weaker Chipotle, the company Starbucks poached from. That was a very tough quarter. Hey, speaking of relentless, there's almost always a wave of selling in Visa after the company reports, because its financials are pretty hard to understand. If you look at the chart of this behemoth, though, I think you'd say buy the dip, which is exactly what I expect will happen again. Be a buyer onto weakness. Wednesday, we have the Federal Open Market Committee meeting and the press conference by Fed Chairman Jay Powell. My thing is, he says stay the course. Perhaps comments on the need to exercise caution when it comes to tariff-induced inflation. He'll also say he intends to fill his entire term, which takes him out to May of next year. I also could use some help redesigning my kitchen. He seems to have a knack for it, maybe when he's done. As I said earlier, this is a pivotal week. For the kind of week where it feels like the biggest tech companies on Earth are trying to work me to death. For instance, we've got Meta and Microsoft, two of the Magnificent Seven, reporting at the exact same time. Both stocks have been giving off signs of better than expected numbers. Call me a believer. Of course, with Microsoft, you have to wait to hear from CFO Amy Hood on the conference call. Speaks in the middle before you can make a move on the stock. Meta, It's all about Mark Zuckerberg. And I think he's crushing it with this Instagram advertising. Does he start charging for WhatsApp? Hey, what a windfall that would be. After the close Thursday, we have two more members of the Magnificent Seven when Apple and Amazon report. Now, both stocks have been going up steadily. They could be, well, look, it could be like Alphabet, which rallied consistently into the marvelous print and kept going up. Apple, I'm not sure. While I say own it, don't trade it, and I'm unwavering about that, I'm expecting an unexciting quarter and a slowdown in growth from the services revenue stream. Not good. I'm also worried about whether they can still receive $20 billion from Google in exchange for making it the default search provider, something a judge seems eager to put an end to. There's something to be said about commenting on the decision by a lower court that said Google's monopolist, which could really hurt Apple, as well as litigation related to Epic, a video game company that's fighting Apple's current policy, where they take a 30% cut of any transaction done within an app you downloaded from their app store. Epic wants to bypass that. I don't know if that seems right. How about Amazon? I'm a huge believer that, like Google, Amazon has a lot of things working for it: the online store, the web services business, advertising. Hey, you know what? Alexa Plus. It's been a long time since Amazon stock exploded higher on earnings, but it's also been a long time since the company had something exciting to say. I expect a very solid quarter. Friday's usually a day of relaxation during earnings season, but not when you have the non-farm labor report coming out. We need to see continued growth in hiring with stable wages. The president can't hector Jay Powell to cut rates if wages go higher. Any weakness in the president might decide he could create a Fed chairman in waiting to put pressure on Powell to quit. Oh, man. All right, then to wrap things up, we have Exxon and Chevron reporting. With Chevron coming right off its legal victory against Exxon, I regard as a victory that let them buy Hess. I expect Chevron to raise numbers, especially now that the president's allowed it to restart pumping in Venezuela. I have no idea what Exxon will say. Either way, I think oil's headed lower, thanks to tepid demand from China, but actually helped by more drilling and more pumping in Venezuela. I'd like to know what everybody thinks about that. Now, the bottom line, if we get through this week with takeovers that would have been unheard of under Biden, along with good earnings and no pickup in inflation, and maybe some big trade deals, look for the averages to make more record highs. I know it's a big gauntlet. I think we make it through despite a huge degree of difficulty. Don't worry, we've got your back either way.
Coming up, Cramer's laid out his game plan for the week ahead. But what about the long term? He's revealing his tricks of the trade to conquer any market. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.